This week, we bring you part 2 of our special 3-part series recorded live at Beyond Activ in New York. Discussions dig into the state of play in the boutique fitness market, exploring which brands are winning and which brands are losing, whilst making predictions about how this segment of the market is likely to evolve over the coming months and years. We reveal some of the most exciting new concepts and products in the market. So if you're ready to hear where the smart money is going and what innovations are set to disrupt the market, then please enjoy this week's episode of L.I.F.T.S.
Pete Moore, fashion icon of Beyond Activ.
Thank you very much. Appreciate it.
We're talking about the phone case, the hat, just the whole
Charlie's
digs.
Angel.
If I would
the
like
Charlie's
to,
Angel, the drip going on here.
yeah. So tomorrow you're going to see a different me because I got 2 orders of Adidas Sambas coming, and they both have been delayed by Amazon for the last 48 hours.
I cannot
please,
wait.
I would like
awaiting.
I would like this podcast from the knees up, please, because I'm going to be fashioning some new.
And we also have
tomorrow.
Krissy Vann from All Things Fitness and Wellness joining us again.
From Vancouver,
My sneaker order did come in.
Vancouver.
So.
Yeah. Hey, keep it below.
Yeah.
Keep it below the knee.
Yeah, mine
Below
too,
the knee,
by
honey.
the way.
Yeah.
Sorry.
Well, Pete, you are the managing partner, managing director of Integrity Square, a boutique advisory firm. We've had a chance to work together.
Several times.
And that was a lot of fun.
It's always fun.
It's always fun hanging out with you. I love the hugs. I love all of it.
Yeah, it's touchy-feely. That's what you get.
I've actually learned to play. What's that game? He
Backgammon.
Yeah, he actually
Oh,
taught
I
me
used to
backgammon
love
as well.
backgammon.
I have it. It's in my bag, actually. It comes with me at all
Of
times.
course it is.
Even deeper.
And I usually have a football with me and gloves, but we didn't bring those here.
But we've also shared the front row of Soul Cycle together.
We have several times. Bethesda.
Bethesda
Shout
and
out to
somewhere
Bethesda.
else. Somewhere else too, I think, right?
And we also had donuts. I think.
We did with the donuts.
For Al, I think.
For
it was.
Al.
Yeah.
That's in Bethesda.
Bethesda, we brought powdered donuts into the Soul Cycle. As if we were training for some event.
Was that pre-workout or post-workout
It was
donut
trying to make it
strategy?
look like it was pre.
Nice.
Yeah.
We pulled the instructor in, and she might have been a little bit awkward.
Yeah, it was
More
awkward
for her
for
than
her.
us. More
Not
for
for us. We're
us.
fine.
We knew what we were getting into.
Public grandstanding is not something that we shy away from.
No, not at all. But so we're here at Beyond Activ. What are you most excited about this event? It's your first year being in North America. You decided to come big, do it in New York. How's it been for you so far?
Look, I think Ross and team has done a great job. We were working with them back when they started. A couple of their guys actually jumped into our Halo Academy class. We ran a boot camp executive case studies for
I've done it.
for 2
I've
weeks.
been on it. It's been great.
It's been on it.
Really good.
And we had a couple guys from Singapore, dial in. So that was great. And we've been tracking their progress. And I think events like this are really important to get everyone together, share ideas. Not only share ideas, but also figure out what everybody else is doing and maybe say, everyone's going right, maybe I should go left. Or, hey, maybe this market seems like it's a little bit too frothy. Or maybe I shouldn't pay a certain price. Or everyone wants to come to the US. Maybe 20% of the people work out in the US, not 55%, right? So got all these groups that are saying, hey, I'm coming into the US market, I'm coming to the US market. It's like, hey man, it's like a Volkswagen, okay? Like I can't fit anybody else in here. Like maybe do your research and then figure out like where your lane is, not just like, hey, you guys have a big population and people are working out again in bricks and mortar. That doesn't constitute like setting up a beachfront, and saying you're gonna put 500 locations up in the US. I say where? So I'm a little bit of a naysayer on the bricks and mortar side from a standpoint of irrational development, which I've been talking about for 15 years. If you're a Pilates studio, there's a Pilates studio in this power center, like don't open up across the street. Like go 5 miles down the road. If you're a Crunch Fitness, like you don't have to open up directly across the planet. You basically like sucking the profit out of the industry and there's enough white space. And I feel like there should be a little more guardrails on this is a good location. This is what the competition looks like. And I feel like a lot of people don't care what the competition is and thinks like my business model is better. But you're all buying the same treadmill, same strength equipment, an awesome design from Escape.
Of course.
So what's your competitive advantage?
Well, let's unpack that. I mean, 2 things you talked about. Number one, Pilates. We've been hearing Pilates a lot, like seemingly every hour someone's talking about Pilates. Number 2, solid core is in a process right now, and a lot of people, solid core and barriers are both in their respective processes. And people, the question I get a lot, I'm sure you get a lot, is what is the TAM? Have they plateaued? Is there room to grow? Solid core has a 2028 plan where they're planning to open up to 250 studios by 2028. They've got about 110 right now. We're both good friends with Brian Myers. But what do you think about Pilates? What do you think about the TAM for Pilates studios and studios in general?
You know, I would also ask your guys' opinion. Pilates is by far the best return on time workout on the planet. So if you want to get results, you know, you and I do SoulCycle, but that's kind of like my religion, my nightclub, and like my exercise all in one.
Do you want to join me Thursday for solid core?
I would love to on the fly here say that I'm in.
You're in.
Thank
okay.
you.
Amazing.
Great.
You got one.
Back to the point of solid core. Now, if you look, so what I like to do is like, tell me your awesome business, and then tell me like what's the business model. Okay, there are a lot of franchises that make less than $2,000 a day. Okay, if you make less than $60,000 a month, you are destined to fail. Okay,
is that an EBITDA and revenue?
Revenue, just revenue. You've got groups that are out there selling people franchises. I'm not going to name names, but let's say bar businesses. Let's say like small hit workouts, and people might say, "Oh, well, you know, the rent is really low." It's like if I'm paying more to the landlord than I'm putting in my pocket, then I am an employee of the landlord, okay? So my EBITDA margin should always be higher than my rent, all right, as a percentage of revenue. In addition, if I can't make $2,000 a day, and I say, why? Oh, it's because I only have 4 or 5 classes on the calendar. Dunkin' Donuts is open 18 hours a day. Subway's open 20 hours a day, right? The hair salons open up 14 hours a day. Why am I only open up 4 and I pay the same rent as everybody else, right? So I got a problem there. So I got to have more programming. The point about Pilates is, and you unpack solid core, they got one person that works at the front desk, right? Checks people in and also runs a class, right? And they lock the door during the workout, which I love from a safety standpoint because I watch way too much Netflix. And like, I got a lot of bad stuff going through my head for a lot of election purposes and assassination attempts that I think are being flagged. It's just like, anyway, lock the door when there's nobody watching the door. Okay, that'd be a good policy for everyone. Maybe even in your house.
It's a good philosophy for
yeah,
life.
just house, apartments, offices, whatever it is. Lock the door. Okay? My mom would say that back in the day also. Thanks, Mom. So Salco has one person, right? And they're running like 14 classes a day. So it's kind of like Southwest Airlines. I'm running 14 flights a day between Phoenix and LA, where everyone else is running like 9, okay? Because they get things out of the gate and they move things very quickly. So if you have one employee and you're running 14 classes a day and you're keeping your price point, Solid Core is just a cash register. So it's a revenue generating machine. And they will have 250 locations because it works in all different areas. When I first met with the founder, she's like, look, I'm in North Dakota and I'm also in, you know, New York City, and the model works. So I think that concept is lights out. I think SoulCycle kind of lost its way, unfortunately, and you and I are evangelists for SoulCycle, and I hate being on camera because I might get blackballed. No, they'll take my money. They'll probably take my 10-pack. They'll take it. They'll take my 10-pack.
It's discounted now.
It's discounted now, yeah. So class pass, everything. Look, you got 3 people that work at the front desk, right? There's a lot of stuff going on there with like shoes and laundry and water and towels and cleaning and the instructors. It's like if I had 2 industrial laundry machines, okay, in 500 square feet, why not take those out and put in 10 Normatec compression boot areas, right, and a salt machine, okay, and take that and turn it into revenue generating instead of like, hey, you want to work here? You want to work the front desk? You want to be an awesome SoulCycle employee? Let's go fold towels for like 4 hours a day. Why is that part of the business? Okay, so I think SoulCycle can't really go as far as Solid Core can because of the overhead, and also because of the price point. Even though the price point's close to the same, I think people in the Pilates industry have held the price point. And what I hope does not happen, and I'll put this on the record, if somebody comes out with $9 Pilates, okay, they should actually vacate the industry because you're giving away the value to the consumer, and the consumer needs to pay for the health.
Pete, I've done your academy, and it's great. The in-depth reviews that you do of different business models. I learned a hell of a lot from going through those. So I definitely recommend. Are you still running them?
Yes.
Okay, definitely recommend checking those out because it was just a perspective of the industry that I've never really seen before, and it was great. I think we did Planet and CrossFit and a number of other sort of really great reviews of businesses. Where we are now, 2024, it's an interesting year, and I'm specifically talking about the US market. A lot going on, interest rates, the political situation. What would you say are a couple of things that you've got question marks over from, you know, a lot of the models that are around there? So things that you're like, okay, look, just be cautious about diving in this particular area. And on the flip side, what things do you think that are going to emerge sort of now and you know, this year beyond that are like, okay, you should be looking at these types of models, concepts, geography, just to give people that are thinking about where to go a few little insights that you would probably be aware of?
Yeah. So I think the first thing that people need to focus on is that in your area, if you think you have a great location, the lease has to be requisite with how awesome that location is. So I can have the best site, but I can have a terrible lease, okay? And if you look at, from my standpoint on the mergers and acquisition side, everyone's gonna look at what's your return on capital, when did this location hit break even? And what a lot of entrepreneurs forget is that, like, the reason why I invest as an investor in a business is because I can scale it, okay? That means the prototype needs to be the prototype. If somebody comes in to me and says, hey, I wanna go raise capital, I got 10 locations, and I wanna go to 100. They usually say 100 or 500. Instead of like, hey, I wanna go to 10 to 25, right? And I say, well, which one's the prototype out of these 10? And they say the 11th. That's gonna be the prototype. It's like, you can't take 10 swings at the bat and then come to me and say, okay, this entrepreneur has learned, you know, over the last 10 and $25 million worth of some capital, that like, this is the prototype. So the prototype needs to have a certain amount of rent, needs to have a certain amount of tenant improvement dollars, and needs to have a certain amount of build out costs. And once you get into a lease, that is either an asset or it's a liability. It's usually not anywhere in between, and it's not a gray area. Okay, so people need to sign leases and walk away from deals that aren't good deals. That would be the first thing. The second thing that I'm concerned about is that people are trying to do too many things inside of the club, okay? If you look at like a Planet Fitness, you're just running that play over and over again. It's like kind of like running the ball in football, right? If you're gonna be an authority on workouts, be an authority on workouts, figure out if you're gonna do personal training, like keep that tight, okay? Keep that in an area, and do workout recovery. Like that's all you need to do. You don't need to be doing, you know, making shakes for people if that's not what you do. You don't need to do kids daycare, right? Like don't try and be everything to all people. Like figure out what your customer wants, what your member is, and then build your business around that. It's almost like people forgot that a health club is really like a co-op. It's like a condo board, right? Like who are my members? Like the people in the building. Okay, those are my members. Let's figure out how I can serve them instead of how can I extract things from them. So I'm concerned about people trying to like add too many things inside. Just become an expert at workout and workout recovery. Those are the two things you need to be concerned about.
When it comes to real estate, greenfield or brownfield expansions right now, because I look at, for example, like a Lifetime, what they've been doing with empty mall spaces, and obviously getting large amounts of capital right now when it comes to expansion. There's still a lot of caution, to your point, in what's happening here in the American market. Same with Canadian when it comes to interest rates and things like that. So where is the biggest opportunity and appetite right now?
The biggest opportunity right now is a landlord that lost a big anchor tenant. And you go in there, whether it's a real estate investment trust, which is trying to make sure that they get rent checks, okay? So the longer that, you know, Five Below or Dress Barn or Ross Stores or, you know, Bed Bath & Beyond, wherever those holes are, and those are 30,000 square foot holes, that real estate investment trust, which is publicly traded, and they pay out 90 to 95% of all their income goes to their investors, right? So it's basically like a lockbox that's paying like 8% out to their limited partners or publicly traded investors. From a standpoint there, you have to go in there and have relationships with those groups and backfill, you know, if you call it next generation space. That's the quickest way in. And they'll give you tenant improvement dollars and they'll give you free rent, because having that hole in their shopping plaza affects everything. Yeah. You know, a funny thing, maybe it's funny, maybe I'll just say it, you decide if it's funny, okay?
I mean, you've had some zingers, so I've got anticipation here.
Easy with the shoes on, Carol. When I started this industry in 1999, there used to be health club prohibition clauses in Target, Kmart, Sears, and Home Depot and Lowe's leases. They would say, if I have a location, a health club cannot be in the same strip center because they took up too many parking spaces.
Yeah.
And then all those groups said, holy cow, they're bringing in like 1,000 people a day. Right. So now I actually want them here. So it's been a whole paradigm shift where if I have a Bed Bath & Beyond, who are you going to call? I'm going to call every health club chain that has reasonable credit, and I'm going to try and get them to fill that space. So it's much quicker to do that than doing a greenfield, doing like a straight up prototype greenfield. However, a lot of people in this industry, and you'll echo this, I expect, they buy with their eyes, okay? And it's like, hey, this is the economics. I don't like that this pole is here. I don't like that, I can't take these and turn these into windows. So like I went around one time with the guy who's head of development for Lifetime. And we went through like 12 clubs. And I'm like, well, what do you think? He's like, I can't buy these clubs because these two, the stairs on the left side, it should be on the right side. It's like, this club's doing like $1.5 million of EBITDA. He's like, I don't care. Like, it's like, that's not, my brand doesn't fit with like the stairs on the left. I mean, it was crazy. To me, that's
Right.
kind of a crazy reason not to do a deal, right? But that's how he felt like this club needed to look. He's not going to tarnish his brand by buying something that he doesn't think fits the brand equity or the aesthetic.
The wait is over. Our new Escape Fitness catalog has landed. This is the essential guide to all of the latest product innovations that are shaping the future of functional training. Bigger and better than ever, this year's catalog is 190 pages, jam-packed with everything from eye-catching, bespoke functional training frames to some of the latest strength training equipment. So sign up today to receive the digital version today. So what are you waiting for? Go to escapefitness.com now. What about models? Like we talked about Pilates. Everyone's talking about Pilates at the moment. Seeing group cycling, people like SoulCycle, that seems to be shifting in the downward direction. Are you seeing any things that, from a trend perspective, that is coming up? And if so, why do you think that's happening?
I'd love to say that concepts and brands have like a 20 to 30 year staying power, or like, while they're hot, but it seems to be kind of like a 10-year cycle. So if you got into Orange Theory before COVID, and you grew and you sold before COVID, like, it was an amazing investment, right? And then that was a cash flow machine. And Orange Theory just hasn't come back. And a lot of the groups that had area development agreements, and just for like a little finance background, if I've got $10 million worth of cash flow or EBITDA, I can borrow 4 or 5 times against that. So I can borrow $40 to $50 million. And every time I add 5 million of EBITDA, I can go and borrow another multiple of that, like another 20 million. So all these Orange Theories were basically like borrowing money to build more. And then when the carousel or the musical chair, you guys want to play musical chairs right now?
We did before you came.
Oh, seriously? I love
you
that.
missed out.
Yeah, I'm pretty good. No, I'm not.
You didn't have the right shoes for it anyway.
Yeah, I don't. I have to go barefoot. So what happened with Orange Theory, like that was like the bellwether of like the hit, right? It was the best. And now it's kind of like lost its way, unfortunately, very unfortunately. So Metabolic is a group that I think is kind of like picked up from where they were and said, hey, look, I've got kind of like a CrossFit meets Orange Theory, a little more harder, edge to it, but they're also doing things in like challenges. Like they're doing things in like 90-day, like you do a 90-day, you do like 180-day. I like that idea. And then I think that concept's picking up. There's also a group out here called New York Athletic Club, I think is what they go by. And they have something called squads. Okay, so you don't join a location, you join a team, and like that team works out together. So I think that the idea of like camaraderie and community, and we're going to do things together, is going to pick up.
What about boutiques? Like, do you see them that model? Because that's certainly we've had the conversations about the exponential situation recently, and some of their sites doing well, some may not be doing quite well. Like, do you see that there's sort of that boutique model's struggling now because of what the clubs are doing and incorporating that? Or do you still think there's opportunities, providing it's something like the Pilates concept, which is making the most of the square foot that they're renting?
Yeah, well, Club Pilates as a business justifies the exponential valuation in the public markets right now, whereas the other brands that they bought, most of them had less than $60,000 a month in revenue, like I was telling you. A lot of them had $30,000 a month, okay? Now, if I sell you a franchise, what I'm supposed to be selling you is a profitable offensive playbook, right? For lack of a better term. I'm giving you like, run this playbook and you will make money, right? If somebody doesn't show what their item 19 is in their franchise disclosure document, so I don't know if you've been through this, but if I want to buy a Crunch franchise, they have to send me a 200-page document, okay? That document says, who runs the company, who owns the company, here's all the fees you're going to pay us, and item 19, here's what the franchise network produces on average on revenue, cost, EBITDA, number of members, and that's available, okay? Massage Envy, as an example, used to show the whole income statement, okay? Now, they only show revenue. Why is that? Is it because of reporting? No, it's because the numbers are not what they were before, right? So anytime you look at a franchise opportunity and you go to item 19, I saw a pickleball one the other day. They had 54 locations, no item 19, right? Why is that? It's not because of technology. It's because they haven't figured out the model yet. And they don't want to like say, oh, here's the financials of like our shitty producing, franchisee network. You want to come join us? So that's my concern, is that groups are and the boutique side they're not set up to win.
They're not set up to win.
They're not set up to win.
Right.
You have to look, if you're running a Soul Cycle, you're doing like $3 million in revenue, okay? Versus someone running a boutique's doing like 300,000 in some of these concepts, right? So if you can't run this airline, with 60 bikes, right? And you can run that at $30, so it's $2,000 an hour, not $2,000 a day, an hour, right? Or I can run solid core. I'm doing 14 classes, right? Times
15 beds, 20 beds.
Times so 225. So I'm doing 225. I mean, I could be doing $6,000 a day, right? In like 3,000 square feet, or probably this room right here is this is a solid core right here.
Oh.
Yeah.
Well, Pete, I have one last question for you. It's been great to have you on.
Thanks for letting me go over time.
The most important question is, you're a Bills fan?
I'm sorry?
You are a Bills fan?
Giants, New York Giants.
I thought you were Bills.
Yeah,
well,
0-2.
Well, let me ask you this question. I'm a Jets fan.
Yeah.
1-1. Going to be 2-1 after Thursday.
Yeah.
Who's going to win the division?
I mean, I'm just going to watch Fubo and just see what happens. I don't think this is a season for wins and losses for the Giants.
Okay.
Or the Jets. I don't see.
I think the Jets will make the playoffs. That's my bet for this year.
Yeah.
I think we'll do it. And you have a podcast. We didn't talk about that. You got a fantastic
Halo Talks.
podcast.
You were number 317. And you number 341.
Wow, that's
Is
impressive.
that, can we,
I love that he was like,
It is impressive.
on his notes right
Except I
there.
wrote it down before.
Yeah, I was like,
You
there's no way.
looked it up. You looked it up. Well, go subscribe, give it a listen. That's incredible.
Pleasure talking to you guys.
Yeah, you too.
Nice to meet you.
So great to
Love
meet
what you
you.
guys are doing. I think all these little tidbits of what you're doing, investing in just these little video reels that you're doing, like someone's got an aha moment. Okay,
Yeah.
you don't know who it is, but I know it's out there. So keep up the good work.
Thank you.
Great.
Good to see you
Pleasure,
guys.
Pete.
Nice.
So
Good
great
to
to
see
meet
you.
you.
Thanks very much.
Thanks, brother.
So Matthew, we've got a special guest on for this segment, Nicoline Roth, who's got an incredibly new concept that I've had a chance to get to know over the last few months. She's bringing it to America, and I think this is, your first time. It's your first time on our podcast,
Yes.
and you're starting to make the rounds. So Nicoline, welcome to L.I.F.T.S.
Thank you so much. Thank you for having me.
We're absolutely happy to have you.
I feel as though, again, I'm missing out on something that I should know about, and I didn't.
What Nordic Strong is.
Yeah, you showed me, we were in an Uber yesterday, and it was flicking through, and I'm like, how did that not sort of come across?
Yeah.
So I'm obviously looking in the wrong places.
Yeah. Well, thank you for having me. I'll tell you a little bit about the concept. So Nordic Strong is a high-intensity, low-impact workout that's centered around the Nordic Trainer. The Nordic Trainer is a patented fitness machine that we manufacture that combines the cardio aspects of cross-country skiing with targeted strength training and movement for increased mobility and balance. So we manufacture this equipment, and we have one studio in Copenhagen called Nordic Strong, and we are in the process of looking for a studio location here in New York.
Right.
So you combine cardio, which is VO2 max, you combine mobility and also strength. The three key indicators for longevity.
Yeah,
Those are three pillars to focus on. What made you kind of come up with that concept?
So the Nordic Trainer has existed for 15 years. And my brother had it at home. He was training for a cross-country ski race. And I started training on it myself. And I quickly realized how effective this was for my body. I used to run a lot. I did a lot of berries, loved berries. But my knees couldn't handle it. My ankles couldn't handle it. So I started using the Nordic Trainer. And I thought it was just one exercise that you did called double poling, which is where you train your VO2 max. But I quickly realized there's a resistance on the machine, and if you're moving in different directions, if you go to the back and pull the poles, then you get strength training. If you're doing stuff on one leg, then you train, your smaller muscles around your knee. So I just felt an overall really good feeling in my body, and that's how I got introduced to the equipment. And from there, I thought I have to get this equipment. I have to own it, and I have to create a concept around it that brings together these elements. But when I founded the company, the longevity aspect wasn't really the reason. It was just because it felt so good on my body. But of course, we've seen, and the way that we do our program, we have that in mind. We get a lot of people into our studio that come with injuries or have discomfort in their bodies, a lot of runners. And they come in, or even like a lot of pregnant girls as well, because they can't, do too hard gym. So they come into our studio and they just feel really, really good. When you train at the front of the machine, you train the front of your body. When you turn around, you can do the exact same exercises, but you train the back of your body. So you're not overtraining, a certain part of your body. You really get that full body experience. It's very core focused, and you get an improved balance and mobility.
What made you decide to go down combining a number of different business models as opposed to saying, hey, we've got a great kind of cross trainer, Nordic walker, let's push that out and sell that to gyms, as opposed to what you've done? What was the thinking behind that?
So I think first of all, the machine has some technique to it, and I wanted to really own the way they use the machine. I want to educate people on how you use it, and I find it easier to do it within my own studio. So the studio for us has been a platform to make people aware of the machine. That's one reason. Another reason is that Nordic Strong as a studio concept is inspired by the Nordic way of life, which means that the whole studio, and also going back to the longevity trend where you have exercise is important, mental health is important, so of course sleep is important, nutrition is important, but we've been thinking the Nordic way of life is being in nature. It's going to using saunas, it's doing winter swimming. And we've thought of these things in our studio.
Right.
So people that are not able to be in nature, they can get a sense of that within our studio. So we have scents, sounds, and lights that are inspired by Nordic living or Nordic nature. So the sounds would be like mountain sounds from Norway. Our lights in our studios are inspired by the Northern Lights, so they change while you train. We have still thought about color psychology. So we have 3 concepts. We have a Pilates-based concept called Nordic Sculpt. Then we have a strong concept that's strength-based. And then we have a cardio concept, Nordic cardio, where you train your VO2 max about elevating your heart rate. And the lights get darker for every class, but are still inspired by the Northern Lights, because it's something I find, for my mental health, it's something I find very, soothing and inspiring. So that's another reason why I wanted to do my own studio, was really to bring that, the way that I've been living with my family and with my friends always, into a fun training experience. And also on the mental health side of things, in terms of longevity, in the Nordics, we're really known for creating, we call it hygge. So hygge means something that's cozy.
No, okay.
And that's something we've always done. So you can't even translate the word. Hygge is like a...
Isn't your wife Dutch?
Dutch, yeah. It's a different part of the world.
Okay.
But it's like a special way of being together. So our reception has a cozy vibe. So it's not a place where you just come in, you do your class, and then you go out. You really come together. We ensure that there are always people laughing. We make fun of people in like a nice way, which is a Nordic thing.
They're quite dry humor, don't they?
Very dry humor. And we bring that into the studio. And also in our classes, like I tell my instructors, you should be saying people's names, and you should make little jokes, but with that dry humor. So that's the reason why we did the studio.
I just wonder how that will work in the flat iron. How will the dry humor resonate?
No, but you know, when you have a studio here, one thing I will make sure of or try to get is for front desk, it's Scandinavians.
Yeah, okay.
Because then you get that sense of the Scandinavian vibe.
Well, so a lot of what we're talking about is we've had a lot of guests on this past year. There's been a transformation, a resurgence and evolution of boutique fitness, right? So you're seeing brands like Solid Core, who I know, which is a brand that you follow closely, really expand and do incredibly well. Others like Soul Cycle are trying to find their way back.
Yeah.
I mean, Berries are doing well in some market, not so well in other markets. Orange Theory, again, franchisees are not doing so great, but they're still growing. So boutique is having a moment, it's having an identity crisis in some way. A lot of people would be afraid to come in with a new concept. Fitting Room is one example that shut down. I'm sure you've heard of it here in New York. So what kind of made you think that, you know what, I'm going to come to America, the toughest market in the world, when all this stuff is going on, and bring in a new modality and a new concept?
You know, a lot of people ask me that. I think, so first of all, when I used to live in the US, and I think if you look at American health and fitness, they're very far ahead compared to Scandinavia. So, and since I founded the concept, I've done it with the US in mind. So that's one thing. So the way that we've done our programming, the way that our teachers, our instructors speak and so on, has been done with the US in mind. So even though it's in Denmark, all our classes are in English. But I see it as such a great opportunity that you have a machine that is so effective. It's low impact. It speaks into the trends that's going on. It's been around for a long time. The people that have been using the machine, which are top athletes, they vouch for it. And it's not a new hybrid model or a new way of using a treadmill. I think then that would make it difficult to come in with a concept saying, okay, this is a new way of using a treadmill. You know, I just think it's a great opportunity for us to come in, and then of course there's an education aspect of it. We have to teach people how to use it, which is going to be hard. But I think because it's different, that makes it my strength.
Do you have, you mentioned that you've got about the saunas and the cold.
Yeah.
Is that in the studio or?
Yeah, so we have a sauna in our Copenhagen studio. We're located on the water, so we don't have cold plunges. We actually go in the ocean. Yeah, so
Nice.
there's canals. There are canals in Copenhagen, so we're located right on the water. That has been in our thinking about how to
You're jumping in the Hudson or something like
that.
that.
Yeah, exactly. No, but I think
I would not recommend that.
Bringing it here, it's going to be only the classes for the first location for various reasons. I mean, one is rent in New York; it's very expensive. So we want our training concept, to have that proof first, and then you can always consider doing, one studio with a cold plunge or a sauna.
Sounds like it's a nice story, isn't it? Like when you think about it, particularly with the whole recovery space coming, like yours last night in Othership, and they've got a whole kind of sauna concept. So you can imagine those two fitting together really nice.
Even like if you see it, all the different trends, I think you can see the longevity trends play out in different ways across the fitness and health industry, but. For instance, in our Pilates classes, we have incorporated breath work. So we end all of our Pilates classes with a breath work to kind of make our members feel centered before they go out on their daily life. So that's, if you don't have the space to have a recovery area, then you can maybe integrate that into your classes. That's what we have tried to do.
And I think something that's different about Nordic Strong is that, to your point, when you look at a lot of boutique modalities, look at a Berries, look at a Soccer, look at Soul Cycle. They all have, one has a reformer bed, you can find that in a big box gym. Another has a spin bike, you can get that on the gym floor. Another one has a treadmill and weights. And you can get them both on a big box gym. But where are you going to find a cross trainer? So maybe in order to really get the experience, you either have to go to a studio or buy the product for your home, because it's really something that you're not going to find in a standard fitness facility. So maybe Maybe there's something there.
And yeah, and then, we've been talking as well about, the tech integration,
yes.
right? And, eventually what you want is you want to have a studio where you train together, you have your basic stats, but that of course should be integrated together with an at-home experience in some way. So that whole tech integration should really put together the studio experience and the at-home experience down the line. But it was very important for me that the studio experience came first, also because it's a new product. So I think it's much harder to go out to the market and say, buy this incredibly effective machine. If nobody's ever tried it before, why should they buy that and not a rower or a bike that they already know? But if they come into a class and they feel the energy and they try the machine, 10 times, then, maybe they'll think, okay, I actually do want to buy this for at home because I'll get my cardio, my strength, and my balance and mobility training.
Right.
Yeah.
Well, look, thank you very much. Appreciate you sharing that with us. When you open, I'd love to come and come and give it a go.
Yeah.
All right. Thank you.
Thank you, Nicoline. We are excited to have David Weston, who's the managing director at HighPost. David, welcome to your first episode of L.I.F.T.S.
Thanks for having me.
Hopefully first of many.
I hope so.
Yeah.
I hope it goes great and you guys want me back. I don't know, but I'm excited to be here.
HighPost, it's not a new boutique studio concept, is it, Mo?
It's not a boutique studio concept. They're actually very involved. Even in your past life, you came from North Castle working with one of our friends, John Canrick, for many years. You've then transitioned over to HighPost about a year and a half ago or so. Why don't you describe to the audience what HighPost is and what you're typically looking at?
Absolutely. So HighPost is an investment firm that started by David Morass, a long-term consumer investor, and Mark Bezos, who's Jeff Bezos' half-brother. We are consumer investors, specifically in products, services, media, and sports. We have two strategies. We have an earlier stage strategy that invests between $5 to $10 million in minority positions in early stage growth companies. And then we have another strategy where I sit, which is late stage growth to majority buyout transactions, investing somewhere between $30 and $100 million of capital at each time that we invest. And within our existing portfolio in health and wellness, we have an investment in Magic Spoon, which is a better for you cereal brand, more on the nutrition side. And then on the fitness side, we're investors in Center, which is a fitness company that delivers content and equipment through both digital and physical products. The digital side was started by Chris Hemsworth. So that's our only investment today. We're a firm. We've only been around for 3.5 years. So we're actively deploying capital and continue to look at opportunities in the health and wellness space.
Looking at the health and wellness space through your view on the world, like what are you seeing specifically, 2024? How are you looking at it? What's interesting? What's not so interesting? Give us a bit of an overview and how you're sort of taking that view.
Sure. So I bend more towards fitness, which is where I've spent most of my time over my career. On the physical side, the physical club side, the retail side, I continue to see capital being deployed in high-value, low-price fitness clubs. And I think the reason for that, and we'll take you back a couple of years, the last 10 years, we've seen a lot of investment on the private equity side into the Planet Fitness system specifically. I think a lot of that was because there was a lot of white space for growth within Planet. But as Planet has matured, there have been a lot of upstarts from HVLP 2.0 and HVLP 3.0. So they took the low-cost model of Planet and they turned it on its head and advanced it further, I'd say. So we've seen a lot of capital go into those concepts. I think a lot of that has to do with the value proposition that those gym chains offer the end consumer, I would argue, is probably better than what Planet Fitness offers. What do I mean by that? For the same price as Planet, they have a substantial amount more amenities, whether it's access to group exercise classes, kids club, access to personal training, all inclusive within the membership. And I think that value proposition has really resonated with consumers and ultimately attracted a ton of capital. And I would also argue that the high value, low price 2.0 players have a much larger addressable market than Planet Fitness, which I think is really hard for people to wrap their heads around because Planet Fitness has catered to that deconditioned first-time consumer for so many years. But I would argue that the high value, low price 2.0 players, they cater to that audience. They cater to that audience. They say it's a no judgment free. Most of them make it a very welcoming environment, but they also cater to a much more serious fitness customer that's looking for affordable options. So we've seen a lot of capital being deployed in those specific segments on the retail side.
What would be an example brand that we can sort of, we're probably aware of that you would say fits into that sort of 2.0?
Absolutely.
locals?
So Crunch Fitness, which is a brand that I had invested in on the franchisee side in my prior life, would be one of them that's growing exponentially and is probably the largest high-value, low-price 2.0 player. Others that are of the similar ilk are EOS Fitness, Fitness Connection, Vasa Fitness, Choose Fitness. So there's a lot of players that have been really built over the last 5 to 10 years and are attracting a lot of private equity investment.
And do you think they're able to move that sort of $9.99 or what $14.99 price point up? Are you seeing a sort of as well as an increase in value, a slight increase in price points as well, or are they sort of maintaining that same level generally?
A lot of them have maintained the $9.99, but specifically for purposes of attracting customers. I think there's a real benefit to being able to advertise that you have a $9.99 price point. It really brings in a lot of eyeballs. But what I have found and what we've seen, a lot of these concepts, once they get you into the door, then they lay you on with the, hey, but for $16.99, you can get all access to group exercise, or for $24.99, you can have access to all of our clubs. So they do a really good job upselling additional value at point of sale. So that $9.99 price point, I think, is really important for customer acquisition, but as a percent mix of the overall member population, it's actually quite small.
So typically when you're talking about HVLP 2.0, you're talking about group exercise, the expansion of the free weight area, maybe recovery stations, these other amenities that you might be able to charge more for. How do you define HVLP 3.0? Because you mentioned that term.
Sure. HVLP 3.0 takes 2.0 and supersizes it. So creates larger functional fitness areas with turf and ability to do small group exercise classes on that turf area, or puts rigs in, or adds an even more amount of amenities as it pertains to things like strength equipment as to what the customer is looking for. So evolving the model one step further from where it started in the 2.0 range.
Who would be a brand? Sorry.
So Crunch is rolling out 3.0 right now.
Oh, really?
They're rolling out 3.0 clubs. And again, I think it's giving more square footage and more floor space to what the customer is looking for today. I think there's been a real trend in the last couple of years with customers looking for more strength options as cardio has gone slightly out of favor over the course of the last 3 years. So I think Crunch specifically has been hearing what the customer says and trying to cater to that end audience.
We were talking to Pete about the struggle for some of the traditional sort of big box gyms, a lot of competition, new players coming in, paying higher rent. And then there being a bigger opportunity in some of the retail spaces where the retailers that are now no longer able to survive are moving out. And so some of the developments are now looking for an anchor tenant, and health clubs are those, but they're taking a much larger space because maybe that's more available. That was the chat we had with Pete.
There's a real opportunity as the economy turns and with these product retailers that have had trouble reinventing themselves over time. And we've seen a lot go bankrupt over the last 5 years, 10 years, especially post-great financial crisis. And there are very few tenants that can take square footage of that size, 40,000 square feet, 50, 60,000 square feet. And if you're a landlord, who better to take the space than someone like a Planet Fitness or a Crunch or one of these high-value, low-price gyms that have 10,000 members, and many of which actually actively go to the gym, contrary to popular belief, quite often, bringing them to that center, and there's just tons of foot traffic. So I think fitness has become an incredibly attractive anchor tenant for many of these landlords, which has created great real estate deals for these high-value, low-price gyms, where having great real estate deals is pretty important as you think about the overall economics of the club.
Yeah. Something that's been really interesting is when you looked at the growth of HVLP, and Planet Fitness is still a behemoth, 18 million members, might have more now. But there's this evolution happening. You're going more upstream, you're adding more features, yet there has been no need for price relief on the premium of the club. So looking at Lifetime Fitness, looking at Equinox, or more regional clubs like the Bay Club as an example, have actually increased their prices, not decreased their prices. Do you think that looking at HVLP 3.0, that it's now going to provide some price pressure to the premium clubs because it is lowering the value proposition?
The answer is, I don't know, but it's possible. And I think the premium clubs, I think the world, in the consumer world, in my opinion, is all about customer segmentation. And for some of the Lifetime customers and the Equinox customers, they're never going to join a Planet Fitness. They're never going to join a Crunch because the brand doesn't, it's not aspirational for them. It may not, and look, I think brands are just an extension of our own personalities, and it's what, you know, we want to, you know, affiliate ourselves with. So I think there's a segment of that population that whatever the price is, they'll continue to pay it. They have the disposable income. I do think that if there is a downturn in the economy or further downturn in the economy, there may be people that say, hey, my Equinox membership, no disparaging them, great business, for $225 a month, it's no longer worth it. I'm going to go to a Crunch. I'm going to go to an EOS, which has a much more affordable price point. I'm not going to transition out of fitness because fitness does really well during recessionary times, but I'm going to trade down into something that I can get 90% of the experience for, you know, 10% of the price.
What do you think about, though, this mid-market? Because the mid-market's kind of, it's been either pushed down or some people are moving it up. But the way you're explaining it, there definitely seems to be this thing in the middle. So let's say I am at an Equinox or a Lifetime and I'm like, okay, things are a little bit tough. I kind of don't want to go to, let's say, a Planet or someone else. Like, you know, do you see sort of an aspirational, affordable thing? Like in Europe, we had Virgin Active, not so much now, but that was kind of a cool, sexy brand, you know, nice design. I kind of see Choose a little bit maybe in there, but do you see that there's a void for something that's sort of in the middle?
There might be. So my question is, what is the mid-priced fitness club going to offer the end consumer that the HVLP players aren't today? And since the Great Recession, there has been a phenomenon, and it's been continuing to play out for the last 16 years, since 2008, of the hourglass consumer. And that's coined by P&G, I didn't make that up. But that played out really so much in the fitness club space. You have the people at the top, tippy end of the spear, the premium players, the Equinoxes and Lifetimes of the world that have continued to do extraordinarily well. And then you have the Planet Fitnesses, which really rose out of the Great Recession. I mean, Planet Fitness only had 50 clubs during the recession. Wow. So they've really grown a significant amount. But all the players in the middle that have just really struggled. So you've seen a lot of those players file for bankruptcy because there's no identity for them. They're not winning on price and value. They're not winning on being premium. So what are they winning on? So I don't know is the answer on that.
And that also parallels with a lot of consumer goods in general. You look at consumer goods, I mean, the second most valuable company in Europe is LVMH, right? So Louis Vuitton, since the recession, has actually grown significantly, and they've actually made acquisitions like Tiffany's. But then you look at the middle market, they've actually not done, think about a brand like Coach. As an example, Coach has not grown since the recession. But then you look at the value brands, they've grown. Shein, Temu, some of these other, that is extremely low brands. But even you look at H&M, Target, these brands have done well. So I think looking at this hourglass model, that has applications beyond just fitness, but also think in other consumer segments as well.
What are you seeing in the consumer fitness space?
Great question. I'll tell you opportunities we're not seeing a lot of. We're not seeing a lot of connected fitness opportunities.
Right.
And I think that space it's amazing how much specific industries go in flows and cycles, because you look back in 2019, even before COVID, and then 2020 was just the great accelerant. And so much capital, we're chasing so few companies. And that market just got so oversaturated. And I think part of that has to do with the rise of Peloton and the rise and fall, and I think that created a lot of challenge. So we're not seeing a lot of opportunities on that end. But on the fitness side, I think we're seeing more opportunities on fitness clubs, on the franchisee basis.
Commercial side more so. Well, yeah. So I guess that's how I define it, but.
Yeah, I think that's right. We're seeing a lot of those. I think specific to consumer fitness, we're seeing a lot of fitness clubs, but on the lower end of the spectrum, we haven't really seen anything in the middle or above
right.
as far as opportunities go.
With that consumer, like the consumer fitness, obviously there was every time you sort of turn on Instagram, there was another connected fitness product almost for a period of time. What's happening to a lot of those companies? Because obviously some of them are around, some of them raise a huge amount of money. Like even the smaller ones seem to raise a lot. Do you see that whole space consolidating and people will pick up a number of brands, and then once the market comes back again, there'll be some of these players? Like how do you see that playing out?
I think I think there's been consolidation already. So Hydro bought Speed, Form acquired Climber. So we're starting to see that. I think a lot of these companies are realizing it's better to go at it with someone else where they can realize a lot of the back-end synergies because they both have head offices that are sort of doing very similar functions, and there can probably be some synergies. So we're starting to see that happen. I also think a lot of these businesses are pivoting more towards becoming profitable as opposed to what they were chasing when money was free in 2020, which was all about growth. Like all these businesses grew because money was free, and they believed that there were a lot of investors that came in and overvalued all these businesses because I think there's a theory that I think Bill Gates coined it called the greater fool theory, that even though you come in at an overvalued price, there will be someone else, a greater fool, at the end of the rainbow to pay a higher price, even if it's overvalued. And I think there was a lot of that during 2020 and 2022. But when rates rised in 22 and end of 23, beginning of 23, I think the music really stopped on that. And a lot of companies said, hey, I'm going to go back to market and try to raise some money. And investors said, our hands are in our pockets. Everyone had alligator arms. And I think that made people realize that there were going to be down rounds, there was going to need to be cuts. It was very, very brutal for a period of time. And a lot of companies have now pivoted to profitability because they said, well, if we can't raise money, we need to operate as a going concern and generate our own cash flow to keep our business alive for as long as this takes. So we're seeing a lot of businesses retrench, bring down their corporate overhead, reduce costs significantly, which, by the way, creates, I think, healthier businesses at the end of the day.
Which is something that we're seeing too. Look, you mentioned two companies, Speed and Climber, that we actually worked on. So I'm very, very familiar with those businesses. But at the same time, today actually, the Fed cut rate by half a point. Do you think that there's going to be still this diligence and more conservative view towards investment, or do you think the rate cuts is going to now signal an opening again?
I think there needs to be further rate cuts for the floodgates to open. I think this is a step in the right direction, but I think rates are still very, very high. And I think one of the challenges for a lot of entrepreneurs and a lot of companies was they said they were latched on to these 2020, 2021 valuations. And what's going on, at least what I've seen in the market, there's these significant bid-ask spreads, right? You have sellers up here, you have buyers down here. And I don't think seller expectations had reset to the reality of the situation. I mean, it's like kind of simple math, right? The interest rates go up, the future cash flows, which a lot of these businesses are valued off of, go down, right? It pays significant amount more interest, capital is more expensive. And if you're an investor, in order to generate the same return that you would have generated when interest rates were low, if you want to stick to that return profile, it's a lower valuation. That's just the math. And I'm not sure sellers' expectations have reset. And I think it's going to take further rate cuts for either buyers to come up or sellers to come down.
What do you see that, from an investor's perspective, biggest opportunities that we're starting to move into late 2024 and into 2025? Opportunities to invest in that may be sort of undervalued and are likely to sort of probably shine over the next few years?
Yeah, one space that we're really looking at is social wellness clubs. So I kind of put that akin what's going on in the social wellness world. So I think consumers are pursuing longevity and self-care more now than they were 10 years ago. And I think 10 years ago, everyone was plowing into boutique fitness and destroying their bodies and not focused on recovery. And I think that's done a lot of damage in the last 10 years. So there's a lot of players out there like the Other Ships of the world, the Remedy Places of the world, the Sweat Houses of the world, the Pauses of the world, who are taking the best of boutique fitness in the fact of community and socialization, but fusing that with self-care and recovery. And that's a space that we're really looking into as millennials continue to age and realize that they're not, I'm an old millennial, that they're not invincible and that their bodies aren't invincible, and want to preserve their ability to do physical activity over the next decade plus. I think these clubs will start being able to generate that demand. And so that's a space that we're looking at. It's early innings, but I think it has a lot of promise.
I think it's very early. In fact, I went to Other Ship yesterday, and Matthew, you were late in joining me, so they didn't let you in. It was definitely a unique experience. It definitely was something like I've been in the sauna and the cold plunges before, but experiencing it in that communal environment, it takes some getting used to. I'm not sure if you've been there or not. It takes some getting used to. but it's a great concept. The energy, just how the whole experience, that's the best way to put it, was curated, was very special. But what I've always wondered is how can that scale outside of the major, let's say, wellness-focused markets, New York, LA, Miami, maybe Chicago, but how can you scale that? And that's, I've always struggled to see the build-out costs are expensive. They tend to be very premium. And I just never understood how that would scale.
I think there's a real opportunity for someone to do that in a more mass offering.
Yeah.
If that makes sense. In a smaller square foot and without the without necessarily all the finishes and the beauty of a lot of these spaces, which are extraordinarily beautiful, but to your point, very expensive. I think there's an opportunity if someone can make the unit economics work to do it in a much smaller square footage and maybe serve less customers, but also have a lower build out, which ultimately creates like a lower bar for your return as an investor.
Well, thank you very much for your time today. Very
Thanks.
interesting conversation.
It's been great. Thanks so much.
Thank you.
Okay, well, we are happy to introduce a husband and wife team, Neal and Yvette McGaffin from Reform RX. Thank you so much for being on L.I.F.T.S. And I have to ask, is this your first time coming onto L.I.F.T.S?
It is.
It is.
It is your first time.
It is, yeah.
And it's my first time doing a solo interview and being a solo host because Matthew had to run off for a few minutes for another meeting. So hopefully this goes well.
We'll all be okay.
We'll be okay. We'll be okay. It's been quite the year. I know you've had quite the journey. We've had a chance to know each other for about 2 years or so, maybe a little bit longer than that. Yeah. I'd love to know, and this goes to both of you, but how has 2024 been? We're more than halfway through the year, and what are you looking forward to as we end the year?
So for us, I think entering the year, it was about really looking at which of the markets do we want to concentrate on. We've got so much traction with hospitality. We're doing a rollout with Hilton, which we're excited to launch. We've gone into Mandarin Oriental in London, Casa Cipriani here in New York. So I think doubling down on that. The boutique studio market is hotter than ever. You can see the strength of Solidcore and what they're doing, and all these other Jet Set Pilates, Body Bar, some fantastic chains, and we've lots of inbound there as well. So I guess for us, it's about positioning ourselves as the choice for these operators to say, like, what are your challenges? Instructors is a big issue within the industry. You can't get talent, you can't retain top talent. And so we're talking about a hybrid offering that you can solve that issue and increase your return on investment. And that's where Reform RX comes into its own, aided by our Pilates personalization by having meaningful metrics that you can take away. So,
yeah, I think to just dovetail that, for us, and just, excuse me as well, my voice is a little weathered after the last couple of days, but it's definitely about mindful movement and, empowering people as we come into this era of Wellness 3.0, and it's about holistic overall well-being, and yes, physicality. And I think, Reformer Pilates, obviously it's, the hot trend. Everyone's talking about it being a trend, and I think it's just solidifying itself as like a really key, stakeholder in the fitness well-being ecosystem, because it covers the whole musculoskeletal system. I think people think the strength category, the cardio category, but really, a reformer is the most comprehensive full body workout. And you can do everything in a way that's completely aligned with longevity. It's low impact, so you're not impacting your joints. And it really meets people exactly where they're at, whether, obviously across ages, but also just fitness levels as well. And for us, we're all about innovation to ensure personalization in that area as well. So.
And Neal, you talked about talent being an issue. Talent was always an issue even before the pandemic, right? It was always hard to find good trainers. I know when I needed a trainer for something, just because I'm in the industry and I'm close with my gym, I know, okay, this trainer is good for this movement or this particular thing, but most people don't know that. So you kind of say you get assigned a trainer, you don't really know if they're good or if they have special skills that's right for you. After the pandemic, during the pandemic, a lot of people really left the industry. A lot of trainers left the industry because they weren't supported. They had to go find other careers. And after the pandemic, it's been hard to find trainers. It's been hard to get them back because they've now moved on. So you're talking about, well, this is a challenge that we solve. How does Reform RX help solve for that gap in trainers?
Well, I mean, we ran studios pre-pandemic, and even then, you know, it was about, you had the best instructors sold out. You couldn't get into their class, and so that was one of the reasons that we wanted to start the platform in the first place. So we have the world's best instructors on demand, so you can train at 2 o'clock in the morning in a 24/7 location if you wanted to. And I think for the operator, you've got that peace of mind to know that if in the worst case somebody doesn't show up because they're sick, you've got an alternative that you're not gonna, you know, you've got a great alternative for your members to say, we've got world-class talent, put your headphones on, it's a completely immersive experience, and you keep your community aspect within your studio. And for the trainers, I guess you can only, as Evie will attest to, you can only work so many hours in a day. It's tough. Yeah. It's tough to be a trainer. And so I think that's...
Yeah, you can only give so much of the best of yourself. And yeah, I've kind of lived and breathed that and worn that t-shirt. And yeah, 12 hours a day isn't sustainable if you're kind of trying to build your client base or your brand. But yeah, I guess we absolutely want to have this complement of not trying to replace, you know, amazing talent, but just to really aid and support them as well with amazing programming, education at the touch of a button. So it's kind of just supporting this whole ecosystem, whether it's in the boutique studio market, but then also bringing it into these new verticals, like Neal mentioned, with Hilton Hotels, Mandarin Oriental, the NED private members clubs. They don't offer a form of Pilates because they're not able to, you know, kind of support with instructors or even have instructors present. So it's just making it more accessible.
And you know, it's interesting, Neal, you know, kind of hearing you talk about the reason for having hard, you know, thinking about a Pilates studio and you can't get in because your favorite instructor is always booked out. That reminds me a lot of what John Foley said early on when he started Peloton, which is him and his wife wanted to go to SoulCycle and they could never get in to the studio because their favorite instructor was always booked up, so he came up with Peloton. But I think from a strategic perspective, you've taken a different approach, whereas he really said, my convenience product is going to be primarily home-based with the home consumer. You've kind of taken this dual channel approach to say that we're going to work with the gyms, we're going to work with the studios, and if you want, you can also get this product at home. But at the same time, you know, you talk about the growth of boutique studios, but depending on the market that you're in and the modality that you're in, not all boutique studios are doing well. No. A lot of franchise-based boutique studios are really struggling, and there's a lot of reasons for that. But solid core, we talked about solid core. We're going to go to solid core tomorrow. Yeah. But solid core is seemingly doing well. Not seemingly, they are doing well. Do you think that Pilates has hit a trend in its maturity or growth cycle? What do you think about Pilates is so attractive to consumers? Why do you think that there's been so much growth? I guess this question is to both of you, but do you think it's a matter of just the consumer understanding that here's a modality that is safe, that is low impact, yet can have significant change as well?
So every week we're probably seeing an article about Pilates and about how it's booming, or it's the Pilates boom. It's certainly booming, but I think it's been a steady, if you look back and you look at the stats of how it's risen year on year, this is not a new thing. If, you know, 20 years ago or 15 years ago, you had people like De Grey doing dynamic reformer Pilates. They were setting those trends. Hardcore in London, fantastic studios. So this is not a new thing. And I think what's happening now is similar to how yoga solidified itself as a main modality within the industry. Pilates has now really got its stamp. So no, I don't think it's a trend. It's definitely, people have realized there's like a perfect storm of, we want longevity. It's one of the main things we want. We want holistic wellness. I think you spoke about that a few weeks ago, but the consumer wants a holistic wellness solution. We don't have time. Time's our biggest commodity. We know we need 30 minutes cardio, 30 minutes strength minimum in a day, and we want something fun. We want community-based interaction, and so that's the boxes that Reformer Pilates ticks like nothing else. Like, take this morning, 3 a.m. I'm in the gym, not because I'm one of those guys, because it was jet lag, and I've got, you know, a choice of 15 treadmills, but no reformer. If I jump on that treadmill, I still can't get out of my head. I'm still thinking about, logistics, or I'm thinking about work or the kids or whatever it might be. If you're in, and I think Peloton have done well with that, because you've got an experience where you're in that studio environment, you're immersed, but it's a singular modality, it's cycling, right? With Pilates, you really go out of your head and you're completely concentrated on what you're doing, because it's so multiverse. It's a bit like if you're on a downhill mountain bike, and you have to be so concentrated, because if you crash, you die. Or, well, you might not die, but you might fall off a cliff. It's a good maybe analogy. You have to be so concentrated. It's the same Pilates.
That's so interesting. I noticed that even, compared like running, so I run, I ride, I do a whole bunch of things, but when I run, it's less technical. It can be technical if you're trail running, but usually it's less technical. Well, when I'm on my bike, I'm fully focused, because you have to be kind of looking to see where you're going. Interestingly enough, too, I remember we've done so much work with SoulCycle, and I remember when I first got into SoulCycle, it's kind of like spinning, right? But it's not, because and I never understood the choreography. But then the choreography was really to keep you more focused
engaged,
and to keep you engaged.
Yeah.
It wasn't really about the fact that it's going to make
tricep, these dips aren't really gonna.
It's not going to do anything, but it's really about the engagement. So I think that's interesting. So as a modality, being on the reformer, it allows you to stay more engaged.
It activates your parasympathetic nervous system, so you enter flow state, and that's 50 to 60% of the time we should be in this alpha beta 1 flow state.
That's right,
but instead, 80% of the time we're in beta 2, which is survival, because we're so overstimulated. And I think that's really why people are going, oh, this is amazing. Reformer Pilates makes me feel like so connected to myself. I leave calm and I have this like mind-body experience, and I look great, I feel great, because I'm activating all these muscles. So it's ticking all these boxes as this amazing holistic offering, because it allows you to just go a little deeper, shut out the noise, and enter flow state.
And given that there's so many competitors in Pilates, both in the reformer, in studio formats, I mean, Club Pilates is still the largest one, but they're so different. How do you differentiate yourselves, both to the consumer and to studios and to gyms that are looking at your product that might be looking at some other options as well?
I think it's safety through innovation. So we track the movement of the carriage to 1,000th of a second using our smart spine. And then we have push button resistance that is just really reshaping the functionality to be much safer. So you can't fall into the springs, into the gully, and it really should be a thing of the past, so that we're manually hooking on springs. There hasn't been much evolution in our space for over 50 years. And, let alone kind of tech or real-time meaningful metrics that give you that feedback. So for us, we owned and operated studios, which maybe you mentioned, and it was about seeing the durability of the reformers with this kind of surging trend of using them in a way that gave you amazing results. And, 8, 10, 12 classes a day, they have to stand up to that. But then also, what if they could tell you about your progress? And I guess, that's how we're so innovative. We're also a little sexier, it's a little less scary. I think our concept.
It could be intimidating, right? Looking at all the cables, and I'm not going to say the company, but there's another reformer product which I saw here, and compared to yours, walking by yours and seeing that, there's all these like cables and bands, and it just seems cleaner and sleeker. Like this could be in my living room.
Well, that was the. Thank you. That was the initial concept, was a Formula One concept car from Renault from the future, and we combined that with saying we wanted enhanced functionality in terms of we had our machines from our studios and we knew what didn't work, what did work. Springs would contort and break, and we wanted to be more durable. So our springs, for instance, are 10x anything else on the market, and that means that we can. When we say we engage 20 pounds of weight, we do. That doesn't work, and that then rolls out to the rest of the machine. It's so durable. It's it's a phenomenal piece of kit, and our designers have done a great job. And just to go back to your earlier question around the other studios and instructors, there's a lot of studios saying they're going to open up hundreds of locations in the next few years. I don't think not everybody is going to do that, and I think instructors is going to be a big problem for them to do so. So I think that's where we're a solution to say, okay, if you're going to open up those locations, how are you going to solve the instructor problem? because there's no solution out there that I see that anybody's coming up with to solve that overnight. And a hybrid model is the one that you need. And to have that stickiness that Evie talked about around having personalization, where you have our feature of MyScore through the patented technology, it's around saying, okay, we know what you've done in the class. Here's how you can do better. And I think that's how operators should be talking to their customers. Kenneth Rand from Marriott yesterday talked about how they've got 10 questions going out to their Marriott members, and the data that they're getting back from that is incredible across these thousands of locations. So if we can, as Reform RX, help thousands of operators do the same thing through the data we can provide through a reformer, that just opens up doors that we don't even know exist, because the operators will go and ask questions and think things that we haven't even thought of. So it's exciting. It's exciting.
So that's incredible. And I just want to shift gears a little bit. Looking at as a scale-up business, you've had to raise capital. You've had to, and the capital markets change a lot. In fact, just today, the U.S. Fed had lowered the rate by 0.5 point for the first time in 4 years. It's big news over here. Hopefully, that's going to loosen up capital and the flow of cash a little bit. But you've had to plan for that not happening. Talk a bit about how you've raised capital and what's next. How do you plan on scaling and growing?
We probably need another day for a podcast to talk about the funding journey. It's tough. It's been a tough road at times. I think it'd be better to have our CFO here to talk about number stuff, but he'd be very excited about the cut in the rates. For us, we've been so concentrated on the product. I think funding's tough. The raising, it's not a nice environment. We've had conversations before about how we need to sort of look after each other in the industry, about everybody's trying to raise capital, and it's not an easy journey. So we got there. We've got a great partner in Clarendon, backed by the British Business Bank, and I think in our journey, the success for us was being really capital efficient early on and taking learnings, looking at people that had gone before us, people like Hydro. Bruce Smith talks about how capital efficient Hydro were, and we closely at times, but closely following their model, and being based in Belfast has been fantastic for us as well, in our earlier journey when we were designing. So that's our story. I guess it's just unique to us. So
I think we're also not driving towards profitability in a very long kind of far away thing. It's very much
it's a now.
Yeah.
It's a now. Look, and Belfast is such a wonderful city. I was there for the first time, as I told you. Did not know you were in Belfast, but I recommend people to go visit it and go visit Reform RX when you're there. Well, thank you so much for coming on.
Pleasure.
We certainly appreciate it.
Thank you very much.
Thanks for having us.
Have a good show.
First one.
Thanks,
Yvette.
Thank you.
Thank you.